question is, what amount? Again, this problem gave us the amount. It says we're going to get paid $10,290, even though the original invoice was for $10,500 because we gave a 2% discount. So again, let's do that calculation because some problems will not give us that much information. They're just going to tell us the invoice amount and the discount amount. And in some cases, we'll actually have to go back and find the discount amount from the sale we made in the past. So let's say if we calculate it, $10,500 times 0.02 means we're going to get a discount of $210. That's, or we're giving a discount of $210 minus the original of $10,500 means that we're going to get paid $10,290. We can do that same calculation with one step by saying $10,500. And this is handy when you go to the store and whatnot. Instead of reducing the discount, you say, well, if I'm going to get a 2% discount, then I'm only going to pay 0.98 with one calculation and say we're going to pay the $10,290. So let's do that calculation up here. We're going to say equals to the same calculation, $10,500 times times 0.98. That's how much we're going to pay. I don't want to calculate the discount. I want to go directly to how much we're going to pay. Then we're going to pay that $10,290. So that's the cash that that we are going to get paid. In this case, we made the sale, and we are not going to credit sales in this case because we made the sale in the past. We made the sale in the past, and we recorded the fact that the client has an IOU. They owe us money. So the IOU account is accounts receivable. It has a debit balance. We need to make it go down because people don't owe us that money anymore. And therefore, we're going to do the opposite thing to it, which in this case is a credit. So I'm going to copy that, put it on the bottom in the credit section, right click, paste it 1, 2, 3. But the credit amount is not going to be for $10,290. It's going to be for the full amount of the invoice, $10,500. So I'm going to put that in there, credit of $10,500, and then explain why that is. Why is that? Well, we put the original amount on the books at $10,500. So if we only reduce it by $10,290, we're going to show that they still owe us money. We can see that more clearly on the subsidiary ledger. So if we go to the subsidiary ledger for Q, the receivable side this time, we look at Q and we see that Q owes us $10,500. If we only reduce that by $10,290, then we'll still be showing that they owe us the difference, and they don't. We're never going to get that money. We need to reduce it by the full amount. But then, of course, the debits don't equal the credits. What do we need to put this in balance? Well, if we highlight it, we need $210, which is the $10,500 minus the $290, which is the discount. I'm going to do that with the plug formula. It needs to be in the debit side. Negative sum of these four cells means we need a debit of $210. If we highlight those four cells, adds up to 0 now. So what account should that go to? And this time, most people correctly, if they look at the trial balance, will say, it's a sales discount. And it is. This time, of course, it is a sales discount because we are given this discount for the sale that was made in the past. But let's think it through a little bit more deeply here. Why are we having a sales discount? Well, what happened is we basically overstated sales in the past. When we made the sale, we put the sale on the books for $10,500. And we're not going to get $10,500. We're only going to get $10,290. We overstated sales, in this case, last month. So you would think that we would reduce sales. You would think that we overstated sales, so we should debit sales, making it go down. But we don't usually ever debit sales. We've said in the past, sales generally only goes up. We don't really want to debit sales. So we're going to make this other account called a discount. A discount acts like an expense in that it always goes up in the debit direction and it reduces net income. But as you can see, it's really a contra sales account. It's really saying, hey, here's the sale that we made that wasn't really a sale. So we're reducing the sales, but we don't want to reduce the sales account. We're going to make this new account called discount. So it's kind of a contra sales account. So I'm going to copy the discount and paste that in C20. And then we're going to post that out. So I'm going to scroll over here. I'm going to make this smaller again. I'm going to go back down to 70 on the taskbar like so. I'm going to go up to cash. So the first one we're going to post is to cash, and it's in the debit side. So cash is our first account. Cash is the first account on the general ledger. I'm in cell 010. We're going to say equals. We're going to point to that 10,290. When we hit enter, it's going to go from 78 up to 89. Then we're going to go to the receivables. So here's the receivables, the second account. Receivables, the second account on the trial balance. And if we go over here, it's the second account on the general ledger. And we're going to be in the credit side this time. So I'm in P27 equals, pointing to that 10,500 over here, bringing the balance down from 44.4 down to 33.9. Then we'll post the sales discount. Sales discount's way down here in the blue section on the trial balance. It's in the same order on the general ledger. So we're going to go to the sales discount over here. It's on the debit side of the sales discount. So we are in AA 29 equals, and we're going to point way over here to that 210, and we're going to see that this is going to go up, put us back in balance once I hit enter, and it's going to bring net income slightly down. And there we have that. Now also note that of course we posted to the accounts receivable over here. We should also post to the subsidiary ledger in that case to show that the particular customer in this case no longer owes us. So customer Q paid us, and so we're going to go in the credit side. I'm going to do this by setting equals, go back to the general ledger, and I want to post this same account. It's the same activity as this general ledger account, but now it's in order by customer. And if we add these up, all the customers now owe us $33,900, and that's the same amount that we have here in the general ledger, same amount we have here on the trial balance. All right, next transaction, going to scroll back over here. We're going to go to the taskbar, bring us back up to 90 on the taskbar so we can see it a little bit better. And we are now on 1212 again, or 412 again. Good. All right. So now we paid for prepaid insurance for the next 12 months. So first question, is cash affected? And we're going to say, yeah, cash is affected. We paid something. Cash has a debit balance represented by the fact it doesn't have brackets. We're going to make it go down by doing the opposite thing to it, which in this case is a credit. This is a normal type of transaction we see in a service company. And so it's no different here. We're going to put it on the bottom. I'm going to right click and paste it 1, 2, 3. I'm going to represent the credit with a negative number. So I'm going to put negative 4800. If we credit something, we're also going to have to debit something, 4800. And then if I look for the account that we're going to debit and I look for insurance, I'm going to see two types of insurance. I'm going to see a prepaid insurance. I'm going to see an insurance expense. We're going to try to tell our accounting department to, hey, put everything in prepaid insurance. Why? Because we didn't yet consume it, and we're going to figure out how much we have consumed in the adjusting process. So we're going to ask our accounting department to always, every time they pay the insurance bill, not to post it to insurance expense, but to post the prepaid insurance so that we can then make the adjustment at the end. Prepaid insurance has a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. It is a debit, it is an asset, because the insurance is something we are going to receive in the future. All right, then we're going to post that out. So I'm going to scroll back over here and post that to the general ledger. Going to make this a little bit smaller, back down to 70, let's say. And we're going to go to prepaid insurance. So here's prepaid insurance. Here's prepaid insurance. It's like, what, the 5th account? So cash, accounts receivable, merchandise, office, prepaid insurance, S28, cell we are in, equals, pointing to that 48, and enter, brings us up to 48 here. We can see the 48 here on the trial balance. We're out of balance by 48. Cash, credit balance, cash, first account, cash, first account on the general ledger. We're in the credit side in cell P11, equals, pointing to the 48. When we hit enter, the account will go down by the 48 to 84,298. All right, next transaction, I'm going to scroll back over. Going to make this slightly larger on the taskbar, back to 90. Scroll back over again. And we are now on the date of 4/16. 4/16, paid M company for purchase on account in the past. All right, no discount, just a normal type of transaction. We're paying someone for something we purchased in the past. Is cash affected? Indeed it is, we're paying someone. Cash is a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case would be a credit. I'm going to put the credit on bottom because they typically go on the bottom. Going to right click and paste it 1, 2, 3 in cell C26. Going to go in the credit side, the amount that we paid, negative 33200, and enter. This account's only going to have two sides to it, so I'm going to go ahead and put the debit in there at this point. The debit being 33200. What account are we going to debit? Well, we purchased something in the past, and therefore we owe somebody. So we're going to debit the account showing that we owe money. That's the payable. Payable means we owe the 93.2. We have now paid part of it. It needs to go down. We already know we're going to debit it. Does that make sense? Yeah, it's a credit balance account. We're going to do the opposite thing to it, which will make it go down, which in this case is a debit. Copying that, pasting that over here, and there's our transaction. Going to post that out. Going to scroll back over here. It's called posting to the general ledger. Going to take our taskbar down to around 70. I'm looking for accounts payable. If I look at our trial balance, accounts payable is down here. It's our first liability account represented in orange. Here it is over here on the general ledger. We are on the debit side in this case. Going to say equals, and then point to the 33.2, which brings our credit balance down to 60 here, and we also see the 60 here. Then we're going to post the cash here, first account on the trial balance, first account on the general ledger, going down to the next available line. I'm in the credit column, equals, and we're going to point to this 33.2, bringing the balance down. So here's the 51.98, 51.98. Also want to point out that we posted something to the accounts payable general ledger. We should also record this by vendor on the subsidiary ledger. So if we go to the subsidiary ledger, we owed someone 33.2. That must be M down here. And so therefore we're going to have to debit M's account, saying, okay, we don't owe M anymore. So that 33.2, we're going to record the same transaction here in order by vendor. And then if we add up the vendors, that's just recording the same GL information, but not by date by vendor. People, we still owe people or companies 60,000. If we go back to the general journal tab, we also see that 60,000 here. We also see it on the trial balance. Looks good. I'm going to scroll back over here to the left-hand side, make it a little bit larger again, back up to 90, scroll back over again, and we are now on the next transaction, which should be on 4/18. And it says we sold merchandise to CF Company, terms 210N30. All right, so we're making a sale now. We're making our normal terms, which are 210 net 30. What does that mean? It means we're going to give a 2% discount if they pay us within 10 days. Otherwise, they pay us within 30 days. And if they don't pay us within 30 days, we're doing some type of collection action, hopefully, to get paid after that point. All right, so the sales price is going to be $13,000. We bought it for $7,800. First question, is cash affected? In this case, no, we bought it on account. That's why we have terms. Therefore, if cash is not affected, we still are going to receive something. We got a receivable. We're saying we did the work, we gave you the inventory, you owe us money, that's worth something, that's a receivable. We'd rather have the cash, but receivable still an asset, has a debit balance. We're going to make it go up by doing the same thing to it, which in this case is another debit. So we're going to copy the receivable. Going to put that on top in cell C28. Right click, paste 1, 2, 3. The amount that we will receive in the future will be the sales price amount, in this case being $13,000. Now remember, I don't want to think about inventory yet. We want to record just the same type of transaction we would record if we were a service company. It's the same type of transaction, and then think about the new thing, which is inventory. So the credit half then would be that we earned the money. And people kind of have a hard time when you think about the fact that we give something away or we sell an active thing, that's the point of earning. But it really is, that's when we kind of earned the money. We gave the merchandise, therefore we earned the money. We have revenue. So revenue's down here. It's in order: assets, liabilities, equity, and then revenue, which we are calling sales because we sell stuff. It could be called anything. If you're a company, could call it anything we want. Could call it income, could call it revenue, could call it sales. And it has a credit balance. We're going to make it go up by doing the same thing, which in this case would be another credit. I'm going to copy that. I'm going to scroll down. I'm going to put that underneath, right click, and paste it in the second column. And the credit will be also for $13,000. So there's our normal transaction for any type of sales we will have. We're going to think of the cost of goods sold or the merchandise transaction as a separate type of transaction, even though it happens at the same point in time. Why? Because it can help us to think through the transaction. So the other piece is the fact that inventory went down. Here's inventory. It needs to go down. It has a credit balance. We gave it away. So it goes down by doing the opposite thing to it, which in this case is a credit. It has a debit balance. We're going to make it go down by doing the opposite thing, which is a credit. So I'm going to skip a line to make a new journal entry, even though I'm not going to put a new date. Skip another line because that's going to be the debit side, and put it on the third line down, which will be a credit. And the credit amount is not going to be for the sales price. It's going to be for the cost, -$7,800. we're going to have a debit related to that amount of 78. And the question is, what will that debit be? This is going to be a new account for merchandising company. The account that